Today in this video, we're going to talk about why a down payment assistance program or closing cost program may cost you a whole lot more money in the end. Check it out. Hi, my name is Rhonda Burgess, and I'm a real estate broker and mortgage underwriter here in the Nashville, Tennessee area, and my firm is Southern Living Realty Partners. All right, let me go here. I did a video a few days ago. We was talking about how a lot of these banks and lending institutions who have these down payment assistance programs don't even know how they work and how they fund very few of those loans using those down payment programs. Let me just say this. I am not bad mouthing or saying that you shouldn't use a down payment assistance program. What I'm saying is don't depend on that. And know how much that free money, that's right, that free money is really costing you, because you know ain't nothing free. You know ain't nothing free. There's no free lunch. There's no free anything, okay? So first of all, let's get past that this is actually going to be free money to you, because it is not. Okay, like in one of my previous videos, I talked about a program from a big bank that's supposed to give you $15,000, up to $15,000 towards your closing costs and or down payment. Okay. Not what you need to understand about a lot of these down payment assistance programs is they are just, when they promote them, they're just to get people in the door to apply for these loans. A lot of these lenders have been hit with lawsuits in the past where they said they weren't doing enough affordable housing loans or loans in certain demographic areas and everything. And these programs are their answer to those complaints or those lawsuits. But again, what you need to do is check and see how many of these programs they actually fund. How many dollars are going out there? A lot of times on these down payment assistance programs, closing cost programs, you either you cannot make but a certain amount of money. It's normally like you can't make more than 115% of the median income, or you have to be low income or whatever. Okay. Then a lot of times you may have to buy in a certain part of town, and that may not be where you want to be. Especially when you're looking at, stuff like the school demographics and everything, and you want your kids in a certain school zone, or you want to live in a certain area, or this area over here is close to work, whereas the area where they say that you can get all this down payment assistance is the hood. Let's just be honest, and you don't want to live in the hood. There's nothing wrong with not wanting to live in the hood no more. Can I go there? Okay. Everybody act like, oh yeah, give back to the hood and everything. Okay, you can donate. You can donate, but it doesn't say you got to live over there. I'm not going there. I'm not even going to go there today. But just know that a lot of these programs, you have to buy houses in certain areas. And that may not be what works for you in your household. Okay? So the number two thing about a lot of these down payment assistance programs is when you start using down payment assistance program, your DTI comes down. I'm just being quite honest with you. I know here in Tennessee, THDA, when you use THDA assistance for your down payment and or closing costs, they limit your DTI. Your debt to income cannot go over a certain number, whether it's 41%, 42%, 43%, whatever. Okay? Just know that when you're doing maybe a conventional loan and you are not using down payment assistance, depending on how that the scoring model, the underwriting system likes you or doesn't like you, you may be able to go up to 50% DTI. You may be able to get that dream home. But a lot of times when you're using these down payment assistance and closing cost assistance, you have to have a shorter DTI. You have to have a lower DTI. Your debt to income has to be much lower. And so that limits how much of a house you can buy. And that may actually limit what areas you can buy in. Because if you got to buy, you can't go above this number right here, and the houses in the neighborhood that you really want to be are up here, then you can't do that if you're using down payment assistance. It just won't happen. Secondly, on the down payment assistance programs, what you need to realize is your mortgage insurance, the PMI. If you have a loan with PMI, okay, let's go there. I've seen a lot of videos and people talking about the Genoa Fund. I think that's how it's pronounced, Genoa. Okay, cool. Again, I'm not talking bad about down payment assistance programs or closing cost assistance. I think it's great, but you need to understand the true cost of that. So I was noticing on that Genoa Fund that you could only do that My Community loan. It's a conventional loan product, but you can only do the My Community through Freddie Mac, I do believe it is, or Fannie Mae, one of these, whatever. You can only do it with the My Community loan, and that's normally like a 97% loan. But have you looked at the MI factor, the mortgage insurance factor, every month on that type of loan is higher than other loans? Higher. So even though you're getting this assistance, your monthly payment is going to be higher because your MI, your mortgage insurance, is higher. Every month, that MI is there on that conventional loan every month until you reach 78% loan to value. Because this is something a lot of people don't understand. Yes, at 80% loan to value, you can ask your mortgage company to remove that PMI. And 9 times out of 10, you're going to have a new appraisal for them to remove it. But it automatically goes away at 78% on a conventional loan. So what I'm saying to you is when you have these loans, you got this down payment assistance, great. But you paying a monthly higher note because your mortgage insurance factor is higher because of that type of loan that you had to do to get this assistance. Is it really worth it? Because see, remember, you're going to pay that MI until you reach 80% or 78% loan to value. So you paying that higher MI for how many months? For how many years? 10, 15, 20? Whereas, okay, you could have gotten, again, if you just saved up the money and paid your own down payment or your own closing costs or whatever, and you wouldn't have had that to deal with in the first place. So all I'm saying is consider all of the costs of that loan. A lot of the down payment assistance programs and closing cost assistance, there's very few that you can use with a conventional loan, like that Genoa one. But most of them make you get an FHA loan. Okay, let's go there again. Y'all know I'm not really a big fan of FHA loans. Why? Because right now, when you take out an FHA loan, that MI never goes away. Ever, 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 forever, ever, forever, ever. Okay? It never goes away. It's there forever. So again, you're all excited over this $5,000 that you got for your down payment or your closing costs. That's nice. That's really, really nice. But you paying MI over the life of this loan. The only way you're going to get rid of that mortgage insurance is either pay that house off or refinance into a conventional loan. So sometimes to me, the down payment assistance, it doesn't equal the cost over the life of the loan. Either you're going to be limited with how much you can buy, you're going to be limited in the neighborhood that you can buy in, or you got this MI and you just paying this mortgage insurance premium. You paying that every month for the rest of your life, or as long as you have that loan, or as long as you live in that house, or whatever. You know what I'm saying? To me, sometimes the cost of this free money is not worth it. Again, get your money up. Stack your own money. Because see, can't nobody tell you what type of loan you doing when you using your own money. Okay? You're not finna tell me what type of loan I'm finna do, and I'm the one paying for this loan over the life of what? You know what I'm saying? That just okay. I'm gonna stop right there. It just don't make sense to me. So, what I'm saying is, make sure that you know the cost of this free money and this free assistance before you go down that route and think that's the only way that you can get into a house. One other reason why I find it kind of like detrimental to use a down payment assistance, closing cost assistance. I don't know about in other markets. I'm talking about here in my Nashville, Tennessee market. Every house that comes out on the market has multiple offers within a matter of days. You know, we're still really, really fast. My partner Mike listed a house the Monday after Christmas, and by Friday we had multiple offers. That Friday, last week of December, we had multiple offers and we were under contract. Okay, so what I'm saying is, in a lot of markets like Nashville, you're still getting, every house that comes on the market gets multiple offers. Okay. One thing with some of the down payment assistance programs is you have to have the seller sign off on some of the paperwork sometimes. Or I know when you're doing here in Tennessee, if we're doing a FHA or a VA loan, there's an addendum. There's a FHA VA loan addendum that has to be signed by the seller. And if you're doing those type of loans and as the seller, you're asking the seller to sign off on this, but there's multiple offers. And the seller has multiple other maybe cash offers or conventional offers. Why would they risk you not being able to close? Because see, what that says to me as a seller is you can't afford my house. I'm just telling you. Because I've had multiple sellers tell me that, oh, well, they really can't afford it if they need help with the closing costs and the down payment. Let me deal with this person over here who on their contract, they're putting 5% down, 10% down, 20% down. And they're not asking for me to sign no papers about no closing cost assistance. Think about it. When you're in a multiple offer situation, you need to come as strong as possible. But if you're coming with, oh, I need your help to do this, a lot of times it's going to put you at the bottom of the list. Even if the person, now we have sellers now, like we have a seller right now who was specific in they didn't want to sell to an iBuyer. They didn't want to sell to an institutional buyer. Why? Because they love their neighbors on either side of this house. They love their neighbors. They didn't want their neighbors. They didn't want to sell to an institution who was just going to put a renter in there. And nothing wrong with renters, but I'm just telling you, they wanted a homeowner in there. Okay. We got 2 offers from homeowners. No, we got 3 offers from people who were actually going to live in the house, potential homeowners. And we got 2 from investors, of course. But I'm going to tell you, we had a FHA buyer who came and she wanted $9,000 in closing costs and down payment assistance. Okay. We had another homeowner who came with a conventional loan. They only asked for us to pay for the seller to pay the title insurance. And they were putting something like 10% down or something like that. I mean, it wasn't a 20% down. Maybe it was 5%. I don't even, again, that's my partner handles that. But what I'm saying is that FHA loan wasn't a contender because they needed assistance. I'm sorry the market is like that, and it sucks. It sucks royally. Don't get me wrong. I myself, I like a more balanced market where no one is in control, where sellers don't have the upper hand, buyers don't have the upper hand. It's pretty much even. You know what I'm saying? But this is what we're in. We're still in the seller's market because of the lack of inventory. So let me just say that again, when you come in with, you need this assistance and this, that, and the third, and you need people to sign off on it and everything, that's going to put you behind the 8 ball. It's not going to make your offer as appealing as maybe a conventional loan where you're coming with your own closing costs or whatever the situation may be. But sometimes when you use these programs, especially those that require the seller to acknowledge that you are participating in this program and different stuff like this, it gives sellers the willies, because they're like, okay, number one, they're normally not familiar with these programs, and they're feeling like, okay, this person may not can buy, or this is going to be a nightmare. So I just rather deal with this cash out, or I'd rather just deal with a conventional loan that's not asking me to participate or sign these papers or whatever. Just even though it's not going to cost the seller nothing, a lot of times they just get wigged out and they get scared. So that's another reason why I'm not a big proponent, especially not in our current market, of using the down payment assistance, closing cost assistance programs. Again, my name is Rhonda Burgess, and I'm a real estate broker and mortgage underwriter here in the Nashville, Tennessee area. If you need help with obtaining home ownership, whether it's your own personal home, investment home, whatever, you can feel free to give me a call. My number is 615-554-0832. Thank you, and as always, have a blessed day.